Welcome to the Fear and Greed Business Interview. I'm Sean Aylmer. There's just under 5 months until the US presidential election, and there's plenty of anticipation about what the outcome will mean for markets and the broader US economy. But there are a few unusual things about this particular election. For one, it's the first rematch between candidates in almost 70 years. The last one was in 1956. For another, Joe Biden and Donald Trump are the two oldest presidential candidates in American history. And according to recent polls, a large portion of US voters have an unfavourable opinion of both candidates, making for a very unusual campaign. So, what will it all mean for markets? Dr. Kevin Hebner is Global Investment Strategist at Epoch Investment Partners. He joins me from New York. Kevin, welcome back to Fear and Greed.
Hey, Sean.
Because this is a rematch, both candidates are known quantities in a way. Does this give a certain amount of certainty around economic agendas of the Republicans and the Democrats?
Certainly, they're both very well known. Biden's been a feature of U.S. politics forever. And I'm based in New York, and Trump is very well known to New Yorkers, really since the 70s. And maybe we're seeing that because when you look at polls and betting sites, they overall do favor Trump. But there's been very little change in either of those two things over the last 6 months. We have a lot going on. We have the first debate at the end of the next month. Then we have the party conventions, July, August, and another debate. So things can change, but at least for the last 6 months, there's been precious little change in both the overall national polls and the betting site predictions.
Now, I've been reading what you've been writing, Kevin, and something I found quite interesting was in terms of economic policy for Donald Trump, and we, as an outsider, we looking in and, we see Donald Trump and we wonder, wow, bit Wild West at times, but the economic advisors, some of the key people that he appointed, have actually done a pretty good job. And what might have been seen as slightly radical at one point seems to be par for the course nowadays.
Yeah, the three key economic appointments by Trump, one would be Steven Mnuchin, the Treasury Secretary. He was very well thought of. Second, he did appoint Jay Powell to the Fed, and Jay Powell's getting top marks. And then thirdly, his trade rep, Robert Lighthizer, extremely knowledgeable, experienced person. He was deputy trade rep under Reagan, and he's got a good chance to be in Trump's cabinet if Trump wins in November as well. So we did have, there's some other appointments that one can debate. The Commerce Secretary tended to fall asleep in meetings, but he really didn't do much harm. But overall,
you can't when you're asleep, Kevin.
In spite of the rhetoric, at least on the economic sense, Trump's appointments, and I think to some extent personalities policy, are pretty conventional.
Okay, so let's talk about some of these specifics. China and protectionism. Certainly, Trump ramped up tariffs, but it's not like Joe Biden has dropped them.
Yeah, and this is now a bipartisan issue, and there really isn't any distance between the two parties on it. In 2016, when Trump started talking about tariffs against China and pretty strong views, it seemed pretty shocking, but that is now the conventional wisdom. And his trade rep from his first term, Robert Lighthizer, he's taking things a step further. There's talk about a 10% universal tariff. There's talk about possibly a 60% tariff on goods coming from China. There's talks about demanding balanced trade on all countries. But I think trade policy is going to be at the forefront. And I think we should expect this to be ratcheted up further, particularly when it comes to China, but also other countries that Trump and Lighthizer feel are unfair in terms of their trade policies with the United States. Australia does not fall in that group. Australia actually has they only trade a little amount with the United States, but Australia actually has a trade deficit with the U.S. So Australia won't be in the bullseye at all when these policies are discussed.
Stay with me, Kevin. We'll be back in a minute. My guest this morning is Dr. Kevin Hebner, Global Investment Strategist at Epoch Investment Partners. What about the Inflation Reduction Act? Because certainly some of Australia's commodity companies have benefited from help from the Inflation Reduction Act. That's a huge spending package which Joe Biden introduced, which, whilst it's called an Inflation Reduction Act, really is about encouraging the shift to green. Where's Donald Trump sit on that? And potentially that could hurt some Australian companies.
So the IRA, it is misnamed. It's really the Green Energy Act. And so 65% of the money being spent through this act are going to red districts. So it may be you won't get Republicans coming out and supporting the IRA. I think it's quite unlikely that they're going to want to dismantle it in the same sense that privately they might criticize Obamacare, the health legislation introduced by President Obama, but they don't talk about it anymore. That's part of the future. And also, similar with Biden, during Biden's term, you've seen the United States become an energy superpower, the number one global producer of both oil and natural gas. But Biden doesn't talk about it. So I think with the IRA, I don't think it's going to be dismantled. Maybe they will talk about not liking it, but similar to Obamacare, the main beneficiaries are red voters, red districts. And my guess is we don't see a whole lot happening in terms of green energy. In terms of fossil fuels, Trump is promising to have further steps in terms of deregulation to help ramp up the production of oil and natural gas even further, to ease permits for drilling, onshore and offshore, pipelines and so forth. So energy is very important to Trump, but I don't think they're going to do much to roll back the green energy policies.
Does Donald Trump believe in climate change? Has he said much on that?
I think in general, the position of many people in the red states is it's not a primary concern. And they're much more focused on issues related, well, certainly economic issues. And that's one reason why they're doing relatively well in the polls. But issues like trade, particularly China, national security, immigration, these things. So I don't know if they're going to come out one way or another and say whether they think climate change is a thing and whether it's induced by human activity, but it's certainly not anywhere near the top of their legislative priorities.
Any chance the US will have a lower deficit under either Biden or Trump?
It doesn't look like that way at all. Both of them have policies that would increase the deficit. Under Trump, it'd be extending the 2017 tax cuts and maybe actually reducing some taxes. He'd like to reduce further the corporate tax rates. And earlier this week, Trump was giving a speech in Las Vegas in which he promised to eliminate the tax on tips. Tips aren't a big deal in Australia, but they're a very big deal here, especially in places like Las Vegas. So I think you're going to have fiscal expansion under Trump. You'll have fiscal expansion under Biden. It'd be very different under Biden. It'd be child tax credits and things like this. But they're both fiscal expansionists, which raises the worry about inflation remaining high, maybe not above 3%, but certainly above 2%, particularly when the economy is pretty close to full capacity already.
And the flow on from that is that interest rates then will probably have to do the heavy lifting and remain higher than they would be otherwise.
Yeah, so I think it's reasonable to expect higher fiscal deficits, higher inflation, and higher nominal interest rates, certainly much higher than we've seen over the previous 2 decades.
Okay, so let's bring this back to investors and what it means for people. If I'm thinking about the S&P 500, if I'm thinking about investing in Wall Street, which president or potential president kind of will be better for Wall Street, if that's actually such a thing?
Well, thinking about Trump, so 2 of his policies, deregulation, which would in particular affect the finance sector, energy, and also tech through de-emphasizing antitrust. Those sectors we think would do well in the initial months of a Trump administration. Overall, the market did quite well in the first year of Trump's when he won in November 2016. The market was up about 20% in the following year, led by tech and finance. And I think it's reasonable to assume something similar would happen this time. Biden is more a continuation of his existing policies, and it's been very much a tech-driven market. For example, year to date, NVIDIA alone has driven 34% of the S&P gains. But with Trump, I think driven by this fiscal expansion, tax cuts, deregulation, one would expect the overall market to do well, but particular tech, finance, and energy.
And the US dollar?
Well, Trump talks a lot about wanting a weaker dollar, and he sees that's part of the trade rebalancing process. But when you actually talk to his economic advisors, either from the first term or potential people this time, none of them support a weaker dollar. That would include Robert Lighthizer, and he's been quite explicit about that. And there's a lot right now in terms of tailwinds for the U.S. dollar, certainly relative to the euro or the pound. I think the yen is a more complicated case. So Trump would like a weaker dollar. It's not clear his economic policy advisors would like that, and it's not clear fundamentals are moving in that direction at all.
Are you looking forward to the next 5 or 6 months, Kevin?
It's strange here. I'm Canadian, and in Canada, I think similar to Australia, the election campaigns at the federal level last 5 to 6 weeks, and they're very short.
Yep.
Here, it lasts about 2.5 years. It's long, and we do get tired. But the good thing is there are some interesting events coming up. At the end of the month, we have the first debate. That's going to be really interesting. The conventions by the two parties in July and August, and then the second debate in September. We don't yet have a VP debate on the calendar, but that'll likely happen late September, early October. So a lot of interesting things happening. I'm very much interested in details of policy and what that means for markets. So I'm certainly hoping that we'll be learning things over the next month or two in terms of how things will play out.
Kevin, thank you for talking to Fear and Greed.
Oh, thank you very much.
That's Dr. Kevin Hebner, Global Investment Strategist at Epoch Investment Partners. This is the Fear and Greed business interview. Remember, this is general information only, and you should seek professional advice before making investment decisions. Join us every morning for the full episode of Fear and Greed, daily business news for people who make their own decisions. I'm Sean Aylmer. Enjoy your day.